Today's podcast is brought to you by Jerry Robinson's Market Barometer, a powerful tool for investors who want to avoid the next major market downturn. Learn more at marketbarometer.org.
Greetings, friends. Welcome to Follow the Money Daily, a daily podcast dedicated to your personal, spiritual, and financial freedom. That's right, we're not just going to stop at your financial liberty. We want your spiritual liberty. We want your personal liberty. This show is all about liberty. My name is Jerry Robinson. I'm your host, economist, best-selling author of the book Bankruptcy of Our Nation. And I'm joined today, as always, by my wife, Jennifer. She is the National Director for our Christian Financial Advisor Network, and she'll be here to introduce our topic of the day. Jennifer?
Yes, and I am very, very excited about our topic today because I don't know about you, Jerry, but this is probably in the top 2 or 3 of the topics that we discuss. We talk about so many things having to do with your financial freedom, spiritual freedom, personal freedom, but I think those who listen and read on our website, they really and truly enjoy this topic the most, and it's how and when the dollar will collapse. Now, this seems like it might be somewhat of a scary topic. It might be a little bit alarming, but this is a topic that you definitely need to know about. This is something that affects every part of your life. You live here, and most of our listeners live here in the United States of America. Even if you're listening in another country, this affects your bottom line as well. This affects your wallet too, because as most of you know, the dollar is used around the globe. It's the reserve currency around the globe. And so today, Jerry is going to breach this topic and really dive into it. And it's something that, Jerry, you won't hear on Fox News or CNBC anytime soon.
No, and even whenever people do talk about the dollar and they talk about a collapsing dollar, what the way they usually make it sound is that the dollar is going to collapse and then you're going to be living in some sort of Mad Max scenario where nothing is worth anything anymore and you're living in a cave. You know, I mean, you've heard some of these Mad Max scenario situations where you need to prepare for a dollar collapse and then live in a cave. Just look at history, okay? When you look at history, what you find out is that currencies do collapse. Fiat currencies always collapse, and in fact, that's what they always do. And fiat currencies, before I go any further, some of you may be wondering what that is, and if you haven't read our book, Bankruptcy of Our Nation, I encourage you to pick up a copy or the audio book version. All of it's available on Amazon or your local bookstore. But Bankruptcy of Our Nation, get a copy of that book. It'll explain so much of what we're going to talk about today in this very brief podcast. But there's a lot of talk about the dollar. And there's a lot of talk about, how long the dollar has before it will completely collapse. Well, regardless of all that, today I want to start a series. It may last a day or two, maybe 3 days, about the dollar and about when we believe the dollar is going to collapse and how the dollar is going to collapse. We're going to give some answers on this, and you'll find that our solutions, and now remember, we've been talking about this for probably close to 10 years now. 2001, September 11th, I can still remember to this day. I was sitting in my kitchen, and the news came on that morning, and I remember, just like you, I remember exactly where I was. I remember exactly how I felt. 9/11 struck our New York City. It struck our nation's capital. It struck us in the heart. It struck America. It galvanized us to help us understand that something bigger was going on outside of our borders. It helped us for the first time to realize that so many of us were asleep. And I was one of those people who was sleeping. Sure, I understood history before that. Sure, I understood some things. But it wasn't until 9/11 that my eyes got wide open to where we were and where we were heading, more importantly, in this world. And so after that time, I remember deciding that I wanted to focus on the global economy. And so I went and I began to study economics. And it wasn't long after I began to study economics at the university level that I quickly began to realize that one of our deepest problems in the globe was the economy, because it was fractured and it was frail and it was fragile. And mainly because we had these fiat currencies, these currencies that are not backed up by anything but the full faith and credit of the federal government. And so that's exactly what a fiat currency is. It's a currency that does not have any value in and of itself, only by the decree of the government. So the government says it's worth something, therefore you have to assume that it's worth something, even though, it in of itself, that piece of paper is really worthless, right? You can use it for wallpaper, you can use it for firewood, I guess, you can use it for a few different things, but it's certainly not intrinsically valuable, right? So I began to study economics, and the more I did, the more I came to the realization that the United States was living on borrowed time. By the time we got to about 2003, 2004, I was really trying to write about this topic. I was trying to get out and speak about the topic. By the time 2006, 2007 came around, I was out all over the country doing my best to wake up America, wake up people who would listen. And there was very few people during that time who wanted to listen to what we were saying. And it was a bit premature, I guess. But now that the collapse happened in 2008, and then, of course, we have this economic recovery, which I got to be honest with you, wouldn't it be ironic if this economic recovery ends up being the world's largest bubble? Wouldn't that be just the height of irony, how these guys operate? Well, it's very possible that that's where we are, because we believe that the biggest crash is still yet to come, and it will be accompanied by a collapsing U.S. dollar. Now, I'm going to give you some basic background information also, because a lot of this stuff has become common knowledge, but I can't assume that everybody knows in our listening audience what this is, because we have many new listeners. So let's just begin, first of all, with the national debt. The federal government owes over $17.5 trillion to bondholders. That's a massive amount of money. But you know what? It's actually pennies in the barrel compared to the unfunded obligations and liabilities that America has racked up. According to the latest statistics, America now sits at a $128.5 trillion unfunded obligation bill, okay? America owes $128.5 trillion just to cover Medicare, Medicaid, and Social Security out to the year 2040. Unfortunately for the United States, we have no money in savings to cover that. So therefore, that means that with $128 trillion in bills and $0 in savings, most people would call that bankrupt. And that's exactly what we believe the United States government is. It's bankrupt. It's not thinking about bankruptcy. It's not nearing bankruptcy. It's not nearing insolvency. It is bankrupt by every definition, because it cannot afford what it's already promised. So to understand exactly how the U.S. dollar is going to collapse, we first have to understand a little bit more about this fiat dollar and where we've come from. If you go back to the 1920s and you look at a U.S. dollar bill during that time, you'll find that it says on the dollar bill at the very top, and we have a picture of this, by the way, on today's podcast, so you'll be able to see it. But it's a silver certificate, and it says at the top, this certifies that there has been deposited in the Treasury of the United States of America $1 silver dollar payable to the bearer on demand. Now, if you look at a U.S. dollar today, that language is gone. In fact, what it says today on today's fiat currency is Federal Reserve note. It doesn't say anything about a silver certificate. There's no silver backing up that dollar anymore. Instead, it's a Federal Reserve note. And it continues by saying this note is legal tender for all debts, public and private. So nothing about silver, nothing about any kind of backing, nothing about anything being payable to the bearer on demand. And you see the benefit of having a currency that is backed up by silver or by gold, you have to keep that currency within a limited supply. Because if you have gold or silver backing up that dollar, then it's basically limited in the supply based upon the supply of gold or silver that you have, unless you decide to willy-nilly and change the exchange rate, which in that case you could create more. In other words, let's say that we said, okay, we have 5 million ounces of gold to back up these dollars, and we're going to price each dollar at 1 ounce, and so we can have however many 5 million ounces or $5 million. But then you could change how you decided to do that. Maybe you could double the currency supply, but leaving the gold supply intact. So there's ways to exploit the gold standard as well. But it still provides a much stronger type of restraint upon central bankers whenever they have a gold or silver standard. Well, today they don't have anything. It's a dollar standard. So they can print as much as they want. And as long, and here's the kicker, please hear this, they can print as much as they want as long as the world will continue to demand them. Now, we've talked extensively on this program and on our website, in the book, and many other outlets in the interviews we've done about the fact that money itself in this current economy is debt. It's debt. If you look, as I mentioned, at the top of a dollar bill, if you just pull one out of your pocket, it says right there at the very top, Federal Reserve Note. Now, if I tell you that I have a car note, what do I mean? Well, it means that I owe somebody for my car, right? It's a car note. It's a loan. I have to pay that note. And yet when we hear Federal Reserve Note, we may not put the dots together, but it's telling you exactly what it is. Federal Reserve is the one who created it, and it's a note. It's owed back to the Federal Reserve. Therefore, a Federal Reserve note is, in essence, a loan from the Federal Reserve. Now, who is the loan made to? To the U.S. government. The U.S. government gets the currency, puts it out into circulation, and I'm using very broad terms here. That I'm not being exactly accurate about how the money actually gets into the system, but I'm just trying to paint a picture for you here. The Federal Reserve, think of them as the ones who actually create the money. Think of the U.S. Treasury as the one who is actually stewarding the entire process. And then think about all those dollars then coming out to you into the general economy through the banking system. Now, all of those paper dollars have been loaned to the United States government. They're on loan. They all have to be paid back. Here's an interesting thought. If all the debt that existed in the United States was suddenly paid off tomorrow, A, it would be impossible because there's not enough money to cover it. B, all the money would be gone because there's not enough money to cover all the debt. What I'm telling you is that money itself is debt. We owe money on the currency that's in your pocket. We owe interest on this money. It's loaned to us by the Federal Reserve. The Federal Reserve gets paid to put it into the system. And who sets their paycheck? Who determines their paycheck? Well, Congress has some rules on that, but they get to set their own interest rate, right? So, in essence, what we have here is a fiat dollar that is, we've been told by the government, is worth something, and it's completely a debt instrument. It even says on the very top, Federal Reserve Note. And on top of that, we have an entire global economy built upon it. I mean, this is just insanity to build a system on such a faulty monetary premise, such as the dollar. So when we think about what happened in August 15th, 1971, when President Richard Nixon came on to the Bonanza show, right? Interrupted it, preempted it. Everybody was upset. Grandma was sitting around the TV, and Bonanza goes off, and here comes President Nixon, and here's what he says. We're closing the gold window. All currencies around the world are now going to be fiat. 1971, everything changed. The dollar's days are numbered because our permission to print money is coming to an end. We cannot continue this current system. It's impossible for us to continue down this current system. And this is why we see China, and this is why we see Russia, and this is why we see other countries beginning to angle for that reserve currency status. They want to kick the United States off of its high horse, and they want the global economic playing field to be leveled. Well, that's understandable. No doubt about it. However, the problem is that the United States has a tendency to fight that with its army, with its military. You see what happened in 2000 whenever Saddam Hussein emerged from a meeting, September 24th, 2000, and he told his generals and then told the world that he was no longer going to accept U.S. dollars for his oil. He was going to instead opt for the euro. And this required a tremendous amount of paperwork and a lot of expense and a lot of labor. And it was a very dicey thing for the Iraqi government to do because people were even saying, is the euro currency even going to be around in a few years? Well, it turned out to be a great payoff for Saddam Hussein because the euro did very well. He converted to euros and was accepting euros, but very quickly, President George W. Bush was beating down his door and hanging him from a noose. Other countries have gone down this same path. Iran does not want to use the dollar for its oil. North Korea doesn't want to use dollars to buy oil. Venezuela doesn't want to accept dollars for its oil. And then all of a sudden, as you begin to add up these countries, you say, well, there's the axis of evil. There they are. Who does want to accept dollars for their oil? Saudi Arabia. Well, Saudi Arabia is the best friend of the United States, isn't it? I mean, in the Middle East. I mean, sure, we hear that Israel is the best friend of the United States in the Middle East. But money talks. You look at the relationship that America has with Saudi Arabia. And I tell you what, Saudi Arabia is one of the most important countries to keep your eyes on as a U.S. stock investor. Because the day that they come out, the day that you hear the story, you want to know when the dollar collapses? When the dollar collapses? Here it is. It's going to happen something like this. You're going to be sitting in your living room, and you're going to hear a story about how Saudi Arabia has decided to no longer sell all of its oil in U.S. dollars. If this happens, then what we're going to have is, in essence, a breakdown of the petrodollar system. And if you're not familiar with the petrodollar system, I encourage you to go check out our article series on it. You can find it at ftmdaily.com/petrodollar. But when Saudi Arabia says, look, we're done with the dollar, then that means that all of these countries around the world who were holding dollars to buy oil, because they have to have dollars to buy oil in this current system, they're no longer going to have that demand. And there's that word again, demand. Because if global demand for all of these excess global dollars that are floating around everywhere, if that demand dries up, then they're going to not need those dollars anymore. And where are those dollars going to go? Well, they're going to come back to the point of origin, right back here to the United States. And when they come flooding back, they're going to create a time of hyperinflation. That will be immediately responded to by our monetary authorities with higher interest rates. But you know what? You really can't hike interest rates in this current environment. So it's going to be a very touchy subject. So if it happens anytime within the next year or two, it's going to be really, a crazy time. Because the Fed doesn't even want to raise interest rates right now. Can you imagine if they had to with all these dollars flowing back? And that's exactly what we see happening with Russia right now. Russia and the United States are at each other's throats. And you have to just really read between the lines to see this in the news. We told you earlier this week that Russian companies were now moving to use Chinese yuan in their trade with China. The very next day, one story that we didn't tell you about, but that was in the news, was that the United States was sending nuclear B-52 bombers to Europe. Haven't done that in a long time. In my mind, in the way I understand things, that was a response to Russia's demotion of the U.S. dollar. So we're seeing a tit for tat going on between Russia and the United States, and it all has to do with money. That's why we call the show Follow the Money. It is so not about all these other things they're talking about. It is so not about dead children laying in the street. It is so not about blood in the street. It is so not about protecting the freedom and liberty of people. It has nothing to do with it. This is about protecting the U.S. dollar. And we have people like Putin running Russia who wants to see the U.S. dollar brought down. We have Iran who wants the same thing. We have China who wouldn't mind taking the reins. And we have everything in history telling us that the United States is heading for a brick wall. And so, if you're looking for the dollar collapse, you'll know it because you'll see Saudi Arabia and other oil-producing nations moving to, say, the euro or to the yuan or to a basket of currencies or even gold for its oil. Now, whenever this happens, this is why it's so important for you to understand this now, because people aren't really going to understand what that means. Most people are not going to understand what that means whenever Saudi Arabia is no longer taking. Well, they're going to say, so what? Who cares what currency they use? Well, if they don't use the dollar, that means, again, the demand for the dollar is not there. And then what do you do with all this supply? Because we've built our dollar supply based upon an unsustainable idea that the world will continue to demand dollars at their current rate. And if they do not continue to demand dollars at the current rate, then all of these excess dollars have to go somewhere. And the way that you get them back into the banking system, if you have too many, is you raise rates. And I've certainly explained this before, but if you're driving down the road and you see a bank that's offering a 6% interest rate on a CD, or let's say a 10% interest rate on a CD, I'm stopping. Brakes going on. I'm taking my money into that bank up to the FDIC limit and getting my 10% per year. And that's exactly how banks suck money back into the system. That's how they alleviate the inflationary pressures that are created by too much money in the system. They raise rates. But of course, if they want to change that situation, like Europe is trying to do now, like the United States is trying to do now, where they want to create inflation because there's not enough, then what they do is they lower rates. And that causes people to take their money out of the bank because they can't get a good return. And so they go and they try to find a better return somewhere else in the private economy. And therefore, you have this mechanism of interest rates that brings up the amount of currency in the system or brings down the amount of currency in the system, all depending on what needs to be accomplished. And the only way the United States is going to be able to handle this breakdown of the petrodollar system is to raise rates. But you raise rates in this current environment, and of course, you're going to have all kinds of issues and problems. And again, most in the American public are not going to have any clue what's happening. Most of them are going to turn to political arguments. Most people who are not following this information are going to immediately assume that it was, if Obama's still in office, it's Obama's fault, right? Or if a Republican's in office, it's the Republican president's fault. Or who knows who they'll blame. The right will blame the left will blame the right. And of course, finally, both parties will point their finger at the Federal Reserve. I really believe when this whole thing breaks down, the Federal Reserve will really take it in the nose. And these politicians who have been treating the Federal Reserve with kid gloves this entire time, never talking about them, avoiding the topic in presidential debates. You remember the debate between Mitt Romney and Barack Obama? The Federal Reserve was not brought up once. One time. The Federal Reserve engaged in historic amounts of money printing. 2010, 2011, 2012. And Mitt Romney and Barack Obama don't even talk about it. Don't even bring up the phrase Federal Reserve. Why? Because they would rather blame each other. But there will come a day when they'll both point their fingers at the Federal Reserve and try to cast blame on the Federal Reserve. And that day is coming, and no doubt about it. So we have a whole lot more to talk about this dollar collapse, how and when the dollar will collapse. We'll just kind of give you a real brief answer now in conclusion. How will it collapse? It will collapse because global demand for it will exceed global supply. That's how it collapses. And that's exactly what we see developing in the news right now as we are talking. So we know that there's going to be problems there. As far as when it collapses, the main thing to watch would be Saudi Arabia, because they really do hold a lot of power over the U.S. dollar. But they're not the only ones to watch. Certainly Russia and China, what they're doing currently, could definitely play a role in bringing about the demise of the dollar much quicker. But in order to see a total collapse the way that we envision, it's going to take many countries, spurred on by countries like Saudi Arabia, that move away from the dollar and cause other nations to feel that they no longer need to hold as many of the dollars that they have and liquidate them, causing those dollars to come back here. And that sets off just a downward spiral. So tomorrow we're going to talk a whole lot more about this on our show. We're going to keep digging into this area. So if you didn't get all your answers on this show, just tune in tomorrow and we'll talk about it again even more tomorrow. Jennifer, where are the markets at right now?
Well, we're actually recording the show a little later today than normal, and the markets are closed. The S&P 500 closed at 1943, a little lower today. Yeah, a little lower than what we were watching for. You know, we expect that we will see the S&P 500 move back up above that 1950 level since we broke it. But again, remember, we don't make predictions here. We have no clue where the market's going to be tomorrow. However, 1950 is the spot to keep your eyes on. What about gold and silver? How did they do? Gold is at $12.16. Silver is just above $19 still, just about like yesterday.
Yeah, okay, got it. All right, well, good stuff. Well, don't forget, if you want to find out more about what I'm talking about here, this petrodollar system, and you have not already downloaded the entire, I think it's like a 47 or 57 page document. Maybe it's not that long, but it's pretty long. And it's called Preparing for the Collapse of the Petrodollar System. You can find that online at ftmdaily.com/petrodollar. Well, friends, that's all the time we have today. You know, as always, I leave you with this final word, this time from Proverbs, the 27th chapter, verse 1. It says, "Do not boast about tomorrow, for you do not know what a day may bring forth." That's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Be sure to come back and join us tomorrow as we continue our series on how and when the U.S. dollar will collapse. Until then, my friends, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.